is it Emily, Brian? You know how Emily's always in a big hurry. She's one of those. She's going to do this class independent study this summer, so for sure that's happening. And I told David Collins and maybe some other people will need to, because we usually offer it the summer, right? Yeah. And this time we're not, because we're, situation.
Well, because it's not usually offered in the fall, so then it would just be spring.
It's only going to be spring, yeah. So people who are doing an internship in the spring like her, that didn't do it now, so we tried to get everybody signed up now that we could. Anyway, so there'll probably be more than one. They're going to do an independent study with me this summer, and they're going to watch.
You're the instructor.
Yeah, they'll watch these videos.
Yeah,
they are going to. Well, thanks. They don't have to put up with me though. They just have to watch the videos and take all the exams.
I couldn't do that.
So do not share your exams with anybody that is studying. Right? You don't do that anyway. I know, but don't share these because I'm going to use exactly the same exams because I want to write off the exams for one or two students. You wouldn't anyway, but just if somebody's studying for the CPA exam, you might share your exams with the office. So when you're about to be sure not to on these, okay? So she learns as much as she needs to learn. I don't need. She wouldn't intentionally, of course.
So you're just going to put the PowerPoints over there, and you're just going to have to know.
She's going to listen to these and watch the PowerPoint or whatever we use, and read and study. We said earlier that you could probably do this class independent study. I think you could.
I agree.
If you have enough self-motivation. You kind of are anyway. You think about it, when you guys get to this level, how many hours do you put in class versus outside of class? And you've been doing that kind of all along, more and more outside of class and really less and less inside class. We take classes from being 3 days a week to 2 days a week to even 1 day a week. And it doesn't matter, does it? So by the time you're in your PhD, you don't need classes at all. They're not really helpful. Not much. You get together for a seminar and you discuss things with people, and then you go study, and study. And you just get together to discuss things with people. So you're right. You don't need, it really hurts my feelings. That's good. It's good that you got to that point. Happy for you. But they do need you.
They do.
Actually, the good thing about, I think, having class with this stuff is it keeps you reading. Don't you think? You just sit back, going and doing it. Making a presentation, you get that one chapter down really pretty good, probably, or whatever you call it, so reasonable. Whatever works to get you working. So how do you get yourself motivated to work hard this semester? You say you worked harder on this than you have in any other class?
Yeah, I think I just realized how close the CPA exam was.
Oh.
So I realized, I started, planning out when I was going to take them. And I realized that since I was taking this, I was just going to go ahead and take the audit section first.
That's right.
So I realized if I, studied really hard, this semester, hopefully the review process was easier.
Maybe the review process is non-existent. Would be cool.
Yeah.
So you've already put a couple $100 in this semester. That's what it takes to get a section. A couple $100. So why do all the classes? I told you guys that in principles. I know I told you.
Well, so long ago. It's just
I know.
The CPA exam wasn't real back then.
Yeah. Now it's oh shit, I'm gonna do this. Yeah. So no, that's cool though. I like that. It's nice. Keep doing that in your career, right? Keep doing it. Be ready. You'll be in good shape. Okay, I understand. What chapter are we doing?
25. It's other assurance and non-assurance services.
Yeah, we're jumping around a little bit.
Yeah, 25.
And I did that because this is really important stuff, and I don't like it just left hanging at the end. And it sort of gives you the full picture before we get into detail, I guess. Okay. So, all right, good.
All right, so pretty much there's two non-audit items. There's compilation and reviews. That are the big ones.
For financial statements.
Correct.
Yeah, for financial statements, you can either do a review, a compilation, or an audit.
And the way it works out is that reviews sometimes are mandatory for loans or to show if you don't need an audit for a bank, whatever you're doing with them. And so the review has limited assurance versus the compilation has none. There's no assurance with compilations.
So what kind of companies first would do a compilation or a review? Private, got to be private. If you're a public company, you're doing an audit. You just are, right? Could private companies also do audits?
Yes.
Absolutely. And like you're saying, how do you decide whether a compilation is adequate assurance at all, or a review where you get negative limit assurance, or you do an audit where you get an opinion, right? It's still an opinion, but it's far more assurance. How would you decide which one you need?
Based on what you're using.
Okay.
So we'll get into more about it, but there's some reports you can't issue for users, and that it has to be specified unaudited.
Well, that's
And
true,
so-
but on a compilation, you say it's unaudited. On a review, you say it's unaudited. You're very careful in your report.
Exactly.
State it is not an audit. We actually say that. The compilation is not an audit. It's a review, not an audit. That's true. And for a public company, by the way, if you're associated with the statements and you're not, and you did not do an audit, if you're, in any way somebody might think you're associated, you say it's unaudited. I did not do an audit. We're real clear about that. We don't want to imply we did an audit when we did. And the same thing's true here, right? I did a review, not an audit. I did a compilation, not an audit. How would you decide, though? You alluded to it. What does the lender want? What if the lender can live with a compilation? Great, they just want to see what the statements are like. Usually smaller loans, smaller companies. So then you would have your client. These would be smaller CPA firms, of course, the big four, and larger firms are not doing compilations. But small CPA firms do them, and they're helping their clients run their businesses. Basically, they're not running them for them, but they're giving a lot of advice, right? They're helping them. A compilation could be great. You don't even have to be independent to do a compilation. You'll get to that, I'm sure, right? But yeah, you don't even have to be independent. But it's a statement that you can use, right? And then it doesn't add any credibility, but at least an accountant looked at it, and it's probably done according to generally accepted accounting principles. It's probably fairly accurate, I mean, we're not assuring anything, but we did it. We did it with the client.
And
So it's how much assurance they want. What if it's a bigger loan for a small company? You're gonna hit a review. What if it gets real big? You're gonna hit an audit. Got it? As the company grows, basically.
so the statements on standards for accounting and review services, that's like GAAP for reviews and compilations.
Actually, it's like gas.
Yes, yes.
Generally accepted auditing standards. This is simple. Yeah.
And so the Review Services Committee from the AICPA issues these. So it's all tied in together with the audit and with just accounting standards in general.
Yeah. We still follow GAAP, right? Everybody follows generally accepted accounting principles, whether it's a compilation or review or not, right? We follow GAAP, of course. Okay.
Relationship. Okay, so this is mainly showing how much work is being done between compilation, review, and an audit. And with the amount of work being done, it's going to be how much you're assuring them and the cost of it also.
You bet.
So if you're doing compilations, it's minimal evidence, if any. It's
No evidence. I don't like the word minimal. None.
I
It
think
should have said
usually
none.
you're just reading the statements, and if everything reads correctly, there you go, with all the supporting. And so that's why they use minimal. But
Okay, I hate this. These new authors, right, or the one new author, this is, Beasley, yeah, this is, no, it was Aaron's by himself. Elder and Beasley both. Anyway, they've changed, and he's probably retired or dead or something, but anyway, you don't say evidence, guys. You don't use the word evidence when you're talking about compilation reviews. If I collect evidence, I am doing auditing. Now, I read the statements for a compilation, right? And if anything looks really unusual, I will investigate it. But that's not collecting evidence supporting balances. Got it? Real critical. Same on a review. I look at more things with a review. I get client representations in a review. In an audit, client representations are evidence that I am collecting in support of the opinion. Okay? Right? It's weak evidence, but it's evidence. In the case of review, it's not evidence. It's just investigating. Got it? We even do analytical procedures, because analytical procedures, I can look at ratios and relationships, right? Analytical procedures in a review are not audit evidence. In an audit, it's an auditing procedure to do analytical procedures, okay? In a compilation, I would never do analytical procedures. Compilation, I'm just reading the financial statements. All you have to do for a compilation is have an understanding of the industry and an understanding of the company. And you have to read the statements, and supposedly, that's a compilation. Now, everybody does more than that, but that's the minimum. But then what you do is if something looks funny, you have to fix it, right? They don't look like they're not following gap, they don't have all the disclosures, numbers don't seem to make sense. You guys with me on that? Okay, it's pretty straightforward. When you get to a review, you're gonna do a little more work, but all you're gonna add is analytic procedures and inquiries of the client. That's it. You'll get client representations. You're not gonna do any confirmations or test the balances or test the transactions. Everybody good? No internal control evaluation, no internal control testing, okay? So you got to get the distinction here. This is really critical. They beat this up when they test it. This is what they test in this area, okay? So I hate that evidence down there. Kind of disregard that.
And so for review services, the engagement is designed to allow the accountant to express limited assurance that the financial statements are in accordance with the acceptable accounting standards, which we've hit on a couple times already, and even before at the beginning of the book. So here are some of the procedures that they're suggesting for reviews. So you want to, just like an audit, you want to know the industry, you know the client.
Same with the compilation. Right, guys? If we did compilation here, you'd have the first two. You wouldn't have the third one or the fourth one or the fifth one. Got it? Okay.
Right, and of course, with all three, the audit, compilation, and the review, you have to have an engagement letter.
Yes.
To let everybody know, this is what I'm doing, this is what you wanted me to do, and then for all three also, you have to write down all the procedures and what you did. And so this is just...
Still document. The documentation still is.
Oh, there it is, yeah.
Yeah.
So, I mean, we could hit on each one of these, but we've already hit on them all throughout the whole book of auditing.
Yeah, really, you have the representation letter. We've talked about everything except probably the representation letter. Representation letter. Well, go ahead. What's a representation?
Okay, so the representation letter is the account is required to have a letter from members of management who are knowledgeable about financial matters. And so really it's who gave me the information.
In an audit, we do this as our sort of a final audit step. They're going to sign that. The CEO and the CFO are going to sign their letter of representation to us, right? And we do the same thing in a review. We do the same thing. We do not do the same thing in conflict. We don't do that either in conflict. So it requires the management perform analytic procedures and obtain a representation letter, turn it into a review. The first two, obtain industry knowledge and know the client enough for a compilation and read the statements, right? In any case, obviously, you read the statements. Okay, so we'll have them do that. It's not audit evidence, though, right, guys? Oh, by the way, you never use the term evidence. You don't use the term examine. You don't use the term audit if you're doing a review, okay, or a compilation. Okay, real separate, okay? They're called accounting services, not auditing services, okay? We're not attesting to anything, right? Somebody got it?
What's the word that you would use, ultimate of review? Like in here, like say he uses review, so like say I'm taking notes or whatever, what word should I use in my place of evidence?
I would simply say inquiries, analytic procedures, and a representation letter. You could call them review procedures instead of audit procedures, that's okay. Or compilation procedures instead of review or audit procedures. But you wouldn't call it evidence, okay? And I know they say it over and over again, yeah. And I got to be real careful with that, okay? I think they kind of screwed that up a little bit. Probably you wouldn't get horribly dinged as long as you made it clear that you're not giving an opinion, and you really realize that. Okay. By the way, you mentioned the engagement letter. In your compilation engagement letter, it'll say we're doing a compilation, which is not a review and not an audit. I'm not kidding. In the review one, you say you're doing a review, which is not an audit. In the audit one, you say you're doing an audit. We tell people we are not doing it because we're associated with those statements. We want them to know. And in the report, it's very clear it's not an audit. Okay. So you want to be real careful about this. Because what do people want, of course? The highest level of service possible, right? The highest level of assurance. By the way, technically, if you collect enough evidence to give an audit opinion, you must give the audit opinion. You can't give a review opinion if you collected enough evidence to give an audit opinion. That makes sense? I mean, otherwise, why did you collect the evidence? If you do enough work to give them a review report, you should give them a review report. It's not an opinion notice, it's a report. Okay? I'd only give a compilation if I did lower level of work, right? Or almost no work. What do you think about the cost structure? I mean, you mentioned that. What do you think a compilation costs compared to a review compared to an audit? They're the same size company, just what do you think happens? So say a small company, otherwise we wouldn't be doing a compilation. You know, they'll come in sometimes and say, I need an audit. And you find out, you ask, you always ask, do you really need an audit? It's a little tiny company, you really need an audit. What are you doing with the audit? It's required somehow, like debt agreement or something. Oh, no, I want to get a bank loan. So I need an audit. Maybe you don't. Who are you getting a loan from? You talk to the bank, and the banker says, oh, no, a compilation's fine. How much money do you save? Or even a review is fine. It's hard to say, but probably a compilation costs 1/10 as much as a review. And an audit or a review costs 1/10 as much as an audit, or maybe 1/100th as much as an audit. Well, not this one. Maybe 1/10. So maybe 100 times more to do the audit than the compilation. At least 50. Got the idea? So should you do work for a client that they don't need and then charge them for it? It's unethical. Don't do that. Go there. It's not, oh, gee, we get to do an audit. This is wonderful. And you go out there and have no transaction. Right. Yeah.
So what if you prepare your engagement letter and you say that you're, or I guess a representation letter, and you say you're going to do a review?
Well, that'd be an engagement letter. You're right first. Engagement letter is what we say what we're going to do.
The representation letter is who's giving you the information.
Yeah, they're saying I gave you all the information, and all the information is accurate. There's nothing you need to know that you don't know, and these are my representations, not yours. That's the representation.
Okay.
So the engagement letter is what are we going to do with the engagement?
So on that, if you say that you're going to do a review, you're not going to do an audit, and then you maybe, I don't know, like gain enough evidence to issue an audit, then you do have to issue one.
Look,
Even if you said
yeah, technically you do, but you'd be careful not to do that.
Okay.
Right. But what would happen is if I'm doing a review and there are a whole bunch of areas I need to investigate, I go ahead and investigate. But that doesn't mean I collected evidence. I'm correcting errors in the financial statements, or helping to do that, right? So I'm still making inquiries, is what we say there. Okay, I'm just trying to figure out what's going on. So any analysis I did there would not be an auditing procedure. But I would never do something where I think the numbers are probably okay, and I'm going to confirm that they are, or verify, or recompute.
Yeah.
Got the idea? All those things I'm not going to do in a review. Okay, all those auditing procedures we talked about, those different types of evidence you can collect. The only things I'm going to do here is make inquiries, asking questions, perform analytic procedures, right? Looking at relationships, ratios, and stuff. I'm getting a representation. I'm not going to do all those other auditing procedures. And then here I'm not going to call them auditing procedures, even though they're really technical procedures. Does that make sense? Mm-hmm. Now, one thing is where you're kind of going with that is what if I start doing an audit and then they realize, gee, they don't need an audit. They just need a compilation or a review. Then what I would do is I can reduce the level of assurance I give them, but only to save them money. Only to save them money. You can't, so this is always a question, you can't back off from an audit to review because you can't collect enough evidence. Those are scope limitations, right? You got a problem. You can't back off because they don't want to follow DAP, because you have to follow DAP on any of them, right? Or they don't want to give you pieces of information, that's a scope limitation. You got the idea? So you don't back off because you can't do the audit. That's different. Now you've got to either, do a disclaimer or do an adverse opinion or give a qualification for scope or gap, right? Limitation. We're going to do a reporting chapter before we're done. We'll talk about that a lot. Okay, so, but you can back off for cost savings. Does that make sense? Okay? Not if you've already done the work, of course, you have to give a report. If you haven't done it yet, you can back off to save money. Can you ever step up from a lower level to a higher level? Sure you can. You just have to collect all the evidence, right? Let's say you started doing a review and then they realize, oh my gosh, we have to have an audit. Well, you can do all the procedures necessary. That wouldn't be a very efficient audit, but it'd still be an audit. Did that answer all that? Good. Okay. Told you there was a lot, Jeff. There really is.
It's really meaty is what it is. So here's a sample of the report that from reviews. In the book on 788, there's 3 separate, I guess, procedures you want to call them, or required disclosures that they have. And so this is an example of one of them, but there's a compilation. I was on the wrong page. There's 4. That's what makes more sense now. So the 4 for the report is the first paragraph explicitly says the notes the accountant has conducted a review and identified the entity of period of financial statements subject to review. So the first one is just saying, here's what I did. All right, and the second paragraph says it specifies that management is responsible for the preparation and preparedness of financial statements and for designing, implementing, and maintaining internal controls relevant to financial reporting. So the second one is pretty much your representation letter. All right, so then
It's true.
your third paragraph would be the notes the accountant is responsible to conduct, review management's financial statements in accordance with SSARS and those standards.
So you're doing it in accordance with the SARS instead of the SAS, right? To the auditing standard. Or Public Company Accounting Oversight Board standards if it's a public company, right? Okay. One thing too, we notice in the first paragraph there, look at the last paragraph there. In fact, let's look at the whole thing. We have reviewed the accompanying balance sheet of Archer Tech as of December 31st, 2013, related statements of income, retained earnings, cash flows for the year that ended. That looks an awful lot like an audit report, except you said you did a review instead of an audit, doesn't it? Same stuff. Then it says a review includes primarily applying analytic procedures, there it is, to management's financial data and making inquiries of the company's personnel. A review is substantially less in scope than an audit, the objective of which is the expression of an opinion regarding the financial statements as a whole. Accordingly, we do not express such an opinion. Did we tell people we did not do an audit or what? Right? We didn't tell them what an audit is. We tell them what a review is. It's real clear. Okay? And then the second one is pretty much the same. The second paragraph is a lot like the audit one. Right? It's management's responsibility, not ours. By the way, is that okay with you guys? Who knows the company better, us or the management? Oh my. They live there, right? We're just outside independent auditors, so of course we're fine. And then it mentions SARS instead of the SASs, right?
Yep.
So that's, obviously, or instead of the Public Company Accounting Oversight Board standards. Okay, good.
And then, like the very last paragraph is specifically to express the limited assurance that the review is going to be.
Mm-hmm.
So it ties into the first paragraph as well.
And it's accounting principles generally accepted in the United States is GAAP, right? That's all that is. And then we say the same thing in the audit. Except in the audit opinion, we say in our opinion, and here we say based on a review, nothing came to our attention. Right, cool, we're there.
Okay, so for compilation services, the definition is it's one that accountants present to a client or third-party financial statements that accountant has prepared. So really it's just reviewing over the financial statements, looking over them, rating them, and making sure everything sounds all right. And so the CPA firm doesn't express any assurance with this because we don't have any backstory, we don't have any of the stuff we just did with the reviews. We just read the financial statements and then making a judgment call.
Yeah. If when we read them, it's clear that they're not conforming to GAAP, obviously, we have to fix that.
Right.
Help fix it. We might actually prepare these statements for the client too, using their accounting records. That's okay. As long as we don't make any of the journal entries ourselves or make any of the accounting decisions or management decisions. If we're making management decisions and accounting decisions, which are, what are we now?
Not independent.
We're not independent. Got it. So
Exactly.
do you have to be independent to do an audit? Yes. Do you have to be independent to do a review? Yes. Same standard, right? Do you have to be independent to do compilation? No, but if you're not, what do? You let them know. Right in the report. Not confused.
Well, the book says the CPA is not required to be independent, and the statements can be issued without disclosure footnotes.
Yeah, they omit substantially all disclosures. So when you look at the compilation report, did they give us one of those? Yeah, there is. Okay, that's with full disclosure. Let's read what this thing says. Okay, we compiled the accompanying balance sheet, instead of auditor review, we compiled. Related statements of income, all that stuff sounds the same. We have not audited or reviewed. See that disclaimer there, guys? The accompanying financial statements need to know this stuff. And accordingly did not express an opinion or provide any. I wouldn't memorize these, by the way. It might be a good idea to memorize the audit report. So you have to modify one or something, you have the basic idea. You have to write one. But this I wouldn't. Just have in mind what's in it. Um, in accordance with GAAP, US again, management is responsible, that sounds exactly the same, doesn't it? It is. Are responsible to conduct a compilation in accordance with SARS, right, issued by the ICPA. Objective of compilation is assist management in presenting financial information in the form of statements without undertaking to obtain or provide any assurance that there are no material modifications that should be made. So we're really clear, there is no opinion and no negative assurance, right guys? And we tell them there is not, okay? Now, who would you do a compilation for?
Private company.
A private company, clearly. What kind? Small. What if they have CPAs working for them? How much? Now, people do this. People do compilations for companies that have a CPA working for them. But exactly what are you doing? You're giving no assurance, and you read the financial statements. So you're a CPA, right? He's a CPA. You're working at the company. He's at a CPA firm. What value is he adding by reading those statements that you prepared?
I don't like it. Control, making sure that you're doing your job effectively. Like
There
you
it
don't really, no one else in the company seems.
Yeah, maybe you're the only person in the company knows what's going on, and you get some additional input, some help, and that's legit, right? What if you have 5 CPAs working for the company? I don't know why you're doing a compilation now, but maybe you are, right? What if you have 5 CPAs in the company? Would you hire an outsider to do this? I don't think so. Now, you can if you want, but I don't think so. Because it implies what? You're adding credibility to those statements. You're not adding any credibility. But if you're adding help, that's what it says there, right? Now, how about if you don't have a CPA working at the company? You have a bookkeeper. And the bookkeeper does all the accounting. You know, it's online on QuickBooks or something, you know? And you want somebody to read them and make sure that they follow GAAP. Oh, yeah, that's exactly what this is for. What about the not independent part, though? What if you're not independent?
So,
How does that work?
if you're not independent, because you don't have to follow the code of professional conduct for compilations, to that, in that respect.
You don't have to be independent. That's
Right, in that respect. But really, just said there's not much on that. There's a little bitty paragraph in here, right? And it just says it can be not independent.
Yeah, and all you do is you add a line that says I'm not independent.
Yeah, it says we are not independent with respect to Williams.
Yeah, you just add
But
that.
there's,
Now, what is that? When would you use this? You know, your brother has a company, your sister has a company, right? And they'd like you to help put together the financial statements. And you'll do it real cheap because of your brother or sister, right? So, can you do it? Sure. Are you now associated with them? Yes. Should you give them a compilation report? Of course you should, right? You prepared them for them, you helped them, right? So then what? You say you're not independent, and that's it, okay? I don't think it makes any difference if you're independent or not. You're not taking any responsibility anyway, okay? Got the idea? What if you're the employee and you're a CPA and you put together the statements? I guess technically you ought to put a compilation report on it, right? Most people probably wouldn't, but technically I guess you should because you're affiliated with those statements. Make sense? That's all I can say.
So Keith, what would that say about the quality of the report you're giving, since you are not independent?
Well, it just tells people to beware that you're not independent, so you're, hopefully you're objective, but you're not independent. So might it bias your view in reading the report? Yeah, or reading the financial statements? Yeah, I suppose so. It could, right? But can you still provide this service? This service, you're not really doing anything for them, right? You're helping them get financial statements together. Does it matter if you're independent or not? Not as much, but would it matter to people to know whether or not you were? Yeah, I think so, and that's what we tell them, right? So you add that. But it doesn't stop you from being able to do a compilation because you're not giving them any assurance anyway. Do you see why in a review you have to be independent, though? You're giving a review, you're giving a negative assurance, and you limited assurance, negative assurance. Do you have to be independent for an audit? Well, sure, you're giving an opinion. You should be independent. Does that make sense?
Yeah.
How about this compilation that omits substantially all disclosures? What does that mean?
so this is, it's on page 788 if you have to go. What I got out of this is it shows compilation if it's acceptable, if the report indicates a lack of disclosure, and the absence of disclosure is not the CPA undertaken with intent to mislead. So
That's the key. That's
right.
it.
So when you get the representation from management, you read it and you think, okay, from me knowing them and from me reading the report, I think they're being honest. And so this is where, without omit substantially all disclosures.
So what would you omit? You give them a full balance sheet, you give them a full income statement typically, right? You give them both of those. Could you leave off the cash flow statement? Yeah, they don't need one, sure, who cares, right? You can leave it off. Don't give them half a cash flow statement, leave the whole thing off. Don't leave off a few lines on a balance sheet or a few lines on an income statement. Don't violate GAAP in what you do give them, right? But if you want to leave off the cash flow statement, you can. Or you can give them the balance sheet, income statement, cash flow statement, and not give them any notes to the financial statement. So that's fine, right? So obviously you didn't give them the cash flow statement, also wouldn't give them the notes. That makes sense? So this allows you to do a cheaper compilation for them, even cheaper still, if those disclosures aren't important to what? The people who are going to use these statements.
Right.
So you want to investigate who's going to use them, or do they think this is all the disclosures? And then what do you do with that paragraph? What did they do at the bottom of 788?
So it's on the screen too if you want to look at
There
it.
it is.
So what they did was they added a line saying if the omitted disclosures were included in the financial statements, they might influence the user's conclusion about the company's financial position, results in operations and cash flows. Accordingly, the financial statements are not designed for those who are not informed about such matters. So this is just saying it's only for management.
Yeah. It's just their management, their shareholders are just closely held, you know. They're familiar, right? It's okay. Maybe even their banker. They're happy, it's fine. They know what the notes would say anyway. You know, maybe, or hopefully. Now, his key point was, what? If a client wants to omit the disclosures because they don't want people to know what you're going to disclose, is that okay? No, right? So watch for those kinds of questions. You can't do it because of that. This is really, you're doing it to save money and save time, right? Okay.
All right, so now we're getting into some special engagements. So in particular, the interim financial information. So the SEC requires quarterly financial statements. We're all aware of that. Like reviews, the public company interim review includes 5 requirements. And they're very similar. We've seen these recently.
This is really unfortunate. We use the term review at least 3 times.
In 3 separate terms.
It means 3 different things. What are they? First, we've got this review of non-public companies that you remember, right? What's this? These are quarterly reports for an audit firm. Right, guys? For public audit firms, right? They don't just do a year-end financial statement, they do quarterly statements, and we don't audit the quarterly statements. We do interim reviews, which are an integral part of our year-end audit. Okay? So we're working on the audit year-round, basically, is what it amounts to. But the report that we're going to give here is going to be a review of the quarterly statement. Okay? Do we have to be independent for this one? Of course, for any review we do. What covers this? SARs or SASs or public company accounting for said standards? Remember, the SASs, the statement auditing standards, are really similar. They are basically the same as the public company accounting oversight board statements. They have the right to write their own, but they haven't yet, right? Okay, for the most part. So what do we got? If it's a publicly held company, who's the ones that are going to have this, it's really public company accounting oversight board statements. Right, guys? Remember all that stuff? Okay. So this is not SARS, unless it's a what? Private company that's doing a review, and then we never get quarters. Okay? So what does it say there? Like reviews under SARS, a review of a public company does not provide a basis for expressing a positive form of opinion. What we're going to do is we're going to give them negative assurance, same thing, right? And a review is conducted according to standards of Peekaboo, and there is no reference to SARS. Absolutely. Okay, that's what I just said. So that's really critical. What's the other way we use review? So we got review of a private company, year-end statements. We've got a review of quarterly information of a public company as an integral part of your audit. And what's the other one? As part of the review process, as part of your system of quality control, everything you do is reviewed, right? I mentioned that before. A staff person's work is reviewed by either an experienced staff person or a senior, depending on how big the engagement is. That work's reviewed by a senior, manager, partner, outside independent partner. Reviewing the work of others is called review too. So you need those 3 terms, and be careful when you look at questions. What are they asking
So, here are the I always butcher this word. Attestation.
Attestation.
Thank you. It's taken me about 3 times to try to get it.
Yeah.
Attestation engagements. So, the standards are going to be on page 790.
So this is other work we can do, right, guys? What does attest to something mean? Give them a what? Anybody got it? When you attest to something, what are you giving? Your opinion. What do you call a attestation report financial statements? An audit opinion, okay? So audits, financial statements are a subset of attestation. Got it? Okay, critical, you know that. Could we do other types of engagements? Yes. And what would be the level of service? What do we do and what kind of reports are given? Got it, guys? So this is going to be under the SASs too, right? Audit statements. The SARs only apply. Statement of, what are they called? Statements of accounting and review services. Did I get it right?
Statements of account. Yes, you did.
I never use that. It's SARs. Yeah, anyway. What you use the SARs for is only reviews and compilations of private companies' financials. Got it? So then when you go over here, and you know, those of you who are really getting ready for the CPA exam right now realize how important it is to have this distinction, right? Okay, and the rest of you, trust me. Okay, you really want to have this stuff wired. This book is everything that they're going to have on the audit section of the CPA exam. This is weird, because they just hash it over and over and over and over. And in this book, he keeps repeating himself, don't they? Over and over and over and over. It's a very small knowledge set, but you have to really understand it. Versus financial reporting is this monster. Think of all the classes you've had, all the books you've got. But they're not going to expect you to have it in as much depth. Here, they expect you to know this inside and out. Okay? How long is it? 4.5 hours or something for this section exam? 4 or 3.5? I don't know. 4 hours? Right? Are they all 4 now?
Only a B seems to be the 3.
Oh, it's still 3.5 for one of them? Or C? Yeah, okay. All right. So anyway, 4 hours talking about what's in here, right? And they just beat it to death. Okay? So really get it straight, okay? If you go through. Takes some work.
So,
all right. Go ahead.
There's actually a statement of standards for attestation engagements, SSAE, which is the attestation standards. It's on 791. And then, so for the types of engagements, there's 3 main ones. There's examinations, reviews, and agreed upon procedures. Okay, so, and each of them have a different level of assurance.
So that's on the top of page 792. Okay.
So,
It's 793 in a box. All right, either way.
well, here's a box on 793, and it's on the screen too. So, the level of assurance depends on the type, obviously. So, the examination, it's sort of like an audit if you've taken a lot of evidence.
No, it isn't. We just don't call it one.
Okay.
Examination and auditing are the same thing in terms of financial statements. But usually for other attestation services, we call it an examination instead of an audit. And we keep the term audit for financials. Okay. But an audit and an examination are the same piece of financials.
All right.
Everybody got that? Subtle, but yeah.
So, the first one's an audit, and we beat audit over the head. So we're going to go to the second one, which is review. And that's just going to just do a lesser amount, which is real similar to the review of that we just talked about. And so it's expressed in negative assurance conclusion versus the positive in the audit. And then you have the agreed upon procedure. And the evidence varies because it's just what you all want to do. It's like the engagement letter of what you've exactly been hired to do, but this is going to be for the whole trip you're there. So this could be anywhere from, I just want you all to look at one area, right? So I think if you're hiring you to review and examine, say, their one section of their one company division, it's not an audit because it's not the whole company. It's not a review because it's just so specific. But you're auditing that one section. So you'd have to have a lot of evidence, and so it's going to be a high level of assurance for, say, GE's appliance division, right? But, so the agreed upon procedure is just as what's in the engagement letter for the most part.
The real key thing is that distribution on the end. Anybody can use an examination. Anybody, right? Use anything. Same with a review. The agreed upon procedures is for a specific purpose, right? It's going to a specific audience. If you say to the audience, who's going to use it, right? Maybe just look at a little piece. I might be doing their receivables, right? Might be doing their inventory. You might be doing a division, like you say, right? It's not the whole company. Okay, tell me about a review of financial statements. A review, whether it's an interim review, right, on a public company, or a review at your end of a private company, or it's a compilation, obviously, of private company. What's the distribution, general or limited? General. Anybody can use those statements, guys. You don't restrict their use. So it's just on the agreed upon procedures type engagements where it will be limited to someone, okay? Got that.
Okay, so now we're going back into what we touched on in one of the single-digit chapters, web trust and sys trust insurance. And so, for the most part, web trust is obviously with a website. And what the CPA has been hired to do is provide assurance that the company's website contains trust service principles and criteria for one or more aspects of the e-commerce activities. And so when you assure that they've met all the criteria, they get a little icon, seal, trademark type deal they can put on their website. So everybody knows this has been reviewed, this has been looked over, and it's all good. And so there's 5 principles of the trust services: the security, availability, processing integrity, privacy, and confidentiality. And here it has what needs to be disclosed with each.
This is really important if you think about it. People doing banking online, people having their senior relatives in one part of the country, you know, you're hiring somebody to take care of them. You can go to their website and see whether or not they've been checked out, right? I mean, there's all sorts of applications for this. And it's really, all of these are really lucrative areas for CPA firms to expand their practice, right? And also it's providing, hopefully, a useful public service, right? You know, so you don't have to be there. The auditors kind of are, right? The CPAs kind of are. Okay. Do it.
So with these in mind, we go into sys trust services. And what this has done is instead of having the CPA provide assurance to the website, you're providing assurance to their entire computer system in-house. Or if it's several houses, if it's national. So this would be, it's firewall, it's servers, it's redundant backups, it's all that stuff. But you have to do it with the trust service principle that we just saw with web trust assurance.
So internal instead of external.
Yeah. Okay, so now we have the controls. And
This is a service organization. What's a service organization? Somebody mentioned that in another chapter. What does a service organization do?
Service.
Instead of you doing it in-house, you farm it out to them, right? Okay. So maybe your payroll. You know, you might be fairly small and you give your payroll to, you know, or you might be large and do it. You give your payroll to a payroll service firm, right? And they handle everything for you. They just do it. And it might be more cost effective than doing it yourself. And they might have better internal controls than you could put together for your relatively small number of employees. Lots of computers. Okay? So what's the deal here? They're providing the services to a whole bunch of different people. Right? They could be doing anything for you, any type of accounting functions. Right? Handling they could handle all your invoicing to your customers, billing your customers, and all the cash receipts, and give you reports on that, right? And transmit the funds. Well, this is pretty important to you, right? They do a good job. And then the outside auditors, when they come in to audit you, need to audit this area. So, but they have maybe thousands of customers they're doing it for. So what does this do? This internal control report of the service organization, what does it do for you?
for an audit, yeah, it takes away some of your, it's more reliable, just like when we're doing it.
You'd have to go audit them. You'd have to go audit the service bureau, right? The service organization. But no, you don't, they're internal controls, because it's part of the internal controls for the company, right? Because they're doing it for you. But you don't have to do that, why? Because they get one audit, right, of their internal control, and then they have a report, and they send you their report. And now what do you know? You know the CPA that did the report, the firm that did the report, right? You know it was a good audit of their internal controls, and you can rely on those controls. So if they have 1,000 customers, all 1,000 customers can rely on one audit report. Got the idea? So is this an important thing to do? Well, of course, right? Okay, so what's the deal with the two types of reports?
Well, so the first one,
This is back in SAS 70. So this is non-public company accounting oversight situation. So I'm doing an audit of a private company. I'm not being covered by peekaboo standards. I'm being covered by SASs, right? But as long as it got that, it's still a little confusing. What's the deal with this? What's the type 1? They're reporting on what?
all right, so on 795, it has two different types. And so for the first type, the service auditor expresses an opinion about the fairness of the description of service organization and the opinion about the sustainability of the system described. So we're just figuring out if what they have in place is working well, and if it's designed properly and it's fair. So if we go to GE and say they outsource their payroll or whatever, you don't want it to have like their appliances be biased or them biased against their appliance division versus their lighting division versus whatever other division. And so that's where it gets the fair part of the design. It's all equal. And then so the second type is going to be on the effectiveness. So it's fair, but how well does it work? And so that's going to be the second type. And the second type, all of them, I guess, are going to be subject to the trust service principles. And so that's going to be mainly for when you're...
Yeah, because nowadays all of this, of course, is online.
Right, you're related for
Wouldn't have
security.
to be if they were doing it manually, but nobody does that anymore.
Would you? And so it goes back to here. So now we have three types going to the trust service principles.
Guys, on this thing, what is this similar to? How about obtain an understanding and document the internal controls? Does that look like type 1 to you or what? So they've done it for you. How about testing the internal controls? That's what type 2 is. So what the other auditor, whoever audited the service organization, has done your obtain an understanding and document the internal controls. They've done a preliminary assessment of the controls. If they're good, or they wouldn't bother to test them, they have to fix them first. Then they test the controls, right? And they've done the testing for you. So they've done that aspect of the audit on this particular area, whatever the service organization is doing for you. That's kind of cool.
Wouldn't type 2 be the same? Or like wouldn't type 2 include type 1 in it? Like,
Oh yeah, you have to do type 1, you can't do type 2.
Okay.
And really, if you're doing an audit in any financial statements, you want to have both. Right? Yeah. But you can, in SAS 70, remember SAS 70 is before we had public company accounting oversight work. And internal control audits were not required. So you could have one just do it just under designing your controls. And you still can if you want. For a non-public company, you can still do that if you want. You just have to do the design. Or you could have to do the design and the controls. But you're right. You'd have to do the design before you did the test. You got to know what they are before you test them. That's a good point. Okay.
All right, so prospective financial statements. There are two definitions, which is forecast and projection. And a lot of times you hear those are interchangeable, but theoretically they're not. So forecasts are what you think your sales will be and your revenue will be and your profit will be to the best of your understanding. So in reality, I think I could sell 100 units a month, okay? A projection is, well, I can sell 100 a month, but I'm going to do extra advertising and I'm going to discount the price so I can maybe get 200 a month. And so since the projection has hypotheticals in it, it's going to be used differently than a forecast.
A forecast is your best guess of the future. Your best estimate you can get. Got it? So we're predicting here. That's your most likely best guess. Projections are happens, what if this happens, right? So maybe you'd have your best guess as part of the projection, and then a high and a low, or you could have more than that, right? The best guess of my sales are gonna be, and the high estimate of the lowest, and all the expenses that would go with those revenues. Got the idea? Okay, so they're for different purposes, right? Right. Okay, sensitivity analysis really on the projections, if you think about it. You know, what range might we be in? Often sensitivity analysis. And the forecast is just, here's my best guess, my best projection. But this is all future, huh? You're gonna audit this stuff? That's an interesting question. What do you do on these types of engagements on this thing?
No, you do absolutely nothing.
You do stuff.
Well, you don't put your name on it.
Yeah, you
So-
do.
Okay.
Give them a report. They don't show the report, but you do. It's kind of hard to pull it out of here. But you do.
I guess I.
This is interesting, huh?
Yeah.
Okay, for two types of it, on prospective statements, forecasts and projections, look at page 796. They can be for general use or for limited use. What does that mean? General is anybody can have it. Limited, you're limited to people who are involved in the deal, right? So you can specify one way or the other, okay? Obviously more exposure if it's general. But you're predicting the future. You're not, the client is. So look at the top of page 797. What are the ways you could do this? An examination, right? Attestation, examination, engagement which the CPA obtains satisfaction as to completeness and reasonableness of all of the assumptions. What you're doing is you're examining their assumptions and you're attesting to the credibility of those assumptions. Does that make sense? That's what you're attesting to. Okay? Not to the numbers, to the assumptions. You're not predicting the future. You don't have to get a crystal ball out. But you can look at their assumptions and say whether or not you think their assumptions are reasonable. A compilation engagement in which the CBA is primarily involved with the computational accuracy of the statements and not the reasonableness of the assumptions. So we're looking at did they compute properly. That's a compilation. You got the idea? So we're not worried about the assumptions. The assumptions are there. By the way, in the examination, you do both the completeness, reasonableness of the assumptions and the computation. You do all obviously. You want to make sure they use their assumptions properly. On examination, you really do both. Compilation, you don't worry about the assumptions. Does anybody see a review in between those two? No. Remember that. There's no review on this. My personal view is it shouldn't be called an examination. It should be called a review. I'd rather it weren't called an examination. What you take a responsibility for, that their assumptions are right. So I kind of disagree with this, but it's what it is. So it's an examination, a compilation, and then agreed upon procedures means what? They're only doing very limited. They're looking at only particular areas, right, for attestation. So it gives you a lot of flexibility, huh?
And Keith hit on it. So the two different types of use, general and limited, the projections and the forecast have different. So the forecast, which is your best guess, can be used for both general and limited circumstances. But the projection, which is an optimistic or a hypothetical, is only for limited use. Because what they explain in here is the general users may have difficult interpreting the hypothetical assumptions.
Yeah, you're giving them various outcomes, right? That kind of makes sense. So this is an area that you can work in. Actually, all these things evolved because people were doing it, and then, well, what is this thing? Am I doing an audit? Am I doing a review? Am I doing a compilation? What is this thing? You know, and you're associated with it. Oh, by the way, I didn't mention this. If you're doing a tax return, in your engagement letter, you say you're doing a tax return, not an audit. I'm not kidding. You actually tell them you're not doing an audit when it has nothing to do with financial statements even. Because you're a CPA firm, right? We're real careful that people don't think we audit anything, right? So, okay, cool.
All right, so here's for the examinations of prospective financial statements. We hit on it already, and what you're doing during the examination. So now we're going to define the agreed upon procedures that we've talked about several times. It's just limited. It's a very small scope, and they're referred to as procedures and findings engagements.
What's an SSAE compared to an SAS? SAS is Statement of Auditing Standards, right? That's for the non-public companies, right? It'd be Public Company Accounting Oversight Board, right? For public companies, do the same thing. What's an SSAE?
Business of standard for the attestation,
Attestation.
Attestation.
engagement.
Yeah. Okay.
What is?
At least he's got an excuse. He's a foreigner. I think you're from here somewhere.
Somewhere, yeah.
More than I do.
Good old Kentucky.
I actually put that on tape. Although now that's okay. We have, what's his name, going over, the guy that's going to be president, Trump. Yeah, anyway. Now we have Trump, so it's quite all right to discriminate against people for whatever reason you want to. So it's now socially acceptable. We're probably going to kick you out of the country. We might kick him out too, though. Don't worry about it. If he pisses off Trump, he's gone. Yeah. Probably true. What a country we've got. It's hilarious. Anyway, I never thought Ronald Reagan could be president either. I never thought George Bush Jr. would be, because I never thought nobody's going to vote for these guys, right? Ronald Reagan made movies with chimpanzees. He's an actor. He's got to be president. Not that anything's wrong with being an actor, but oh my God, that qualifies you. And yeah, and then we know about George. So then you add now with Trump. Oh wow. So he might make it. Yeah, maybe he'll be the president. And we're going to cut off all our trade with China. Isn't that what he said? We're not going to trade with China. Okay, that'll be fine. I don't know where we're going to get all our toys for our children. You know, cheap things that everything's going to cost a lot more. Okay. Okay. Anyway, so back on the other one just for a second. At the statement on standards on audit on attestation engagements. That's how you got that, right? All right, what's this stuff? Yeah.
Oh,
What is this stuff?
okay. So, other comprehensive basis for accounting. So this is going to be the audited statements prepared for GAAP or IFRS.
We call this OCBOA, by the way, you guys. Isn't that cool? Isn't that a great word? OCBOA, right? Other comprehensive basis of accounting. Everybody says that, okay? So they won't say other big comprehensive basis. They'll say, oh, they're doing OCBOA statements. You know that. Okay, not for the secret, again, just for work. Right? So what does this mean? They're not following what?
It's good. They're not following either GAAP or IFRS, depending on which one they have to follow.
Yeah. So these aren't generally accepted accounting standards. They're not, right? Can people actually put together financial statements that are not GAAP?
They use it in-house.
Yeah, yeah. So well, and even if you use it externally, you can, as long as you're real careful, you know, who you give it to, right? Yeah, but, so what do you think of this thing? They're actually going to have income tax basis, right? Or cash basis, those are the common ones. Cash or modified cash tax, those are the typical ones. Regulatory agency, it used to be that lots of regulatory agencies, governments and unions and stuff, they'd have their rules, and you had to follow their rules, just drive you crazy. So you had to account for things the way they want you to. What we do when I was in public accounting in a small firm and had clients like this, we'd give them a GAAP basis statement, and we'd give them a regulatory basis too. And we'd give them a compilation report or a review report on the regulatory agency basis that said that's what it was, and we give them a GAAP one too, so that somebody could actually use it. But yeah, you can do this, can't you?
So, just for instance, like Keith was saying, the tax basis of accounting would be when we were always a tax class, and you had to reconcile your GAAP statements to go tax basis. So all they're doing is taking your tax, which you're already supposed to do for your tax return, and using it as their regular standard.
Yep.
And so it's simpler for them because if it's small, you have 3 people, 1 person, you only have to do it once. And so whatever you have on your report, on your software, it just be followed with the government. So it's simpler, and it's allowed.
So can you give them an audit opinion? Yeah.
If you have to go back to.
No, you give an audit opinion. See, look at the bottom of page 798. You're giving an audit opinion on income tax basis. You have to tell them what? That they're not following GAAP, that they're following income tax basis and other comprehensive basis of accounting. And you have to make sure they do that right. And you can't just do anything. What's kind of interesting is when they talk about a definite set of criteria having substantial support. I don't know quite what that means. I know what GAAP is. I know what tax basis is, and I know what cash basis is. And modified, you act, well, all it says, which is true, is you'll now have fixed assets and depreciation. Because true cash basis, you wouldn't have such a thing as an asset. They'd all be expenses, right? You modify tax basis, so we pay. Yeah, so I don't know. It's all right, though.
So auditors are often asked to audit these issues, which Steve just said is completely acceptable. And there are two different types of audit. Materiality is defined by the item audited, and then gas, I guess, which is your general accounting attestation.
Generally accepted audit.
I butchered that one right up. So
We have gas and gaps, those accounts, right? Gas and gaps. Generally accepted auditing standards, generally accepted accounting. Should be got it heading for you.
So the materiality is, let me find it. If I read it properly, which I haven't been reading properly this past couple slides, it's not done how we usually do it, versus based on it as a whole. It's based on the actual item itself.
That's if you're doing a specified element, a counter item. So say I'm auditing their inventory or their receivables or anything, right? By the way, can you pick and choose what you want to audit? Can you do a piecemeal of it? Could I audit maybe, I skip cash, I do receivables, I skip inventory and do prepaids, and why you do this, and I skip short-term debt, but I do long-term debt. Can you do that? No, it's a piecemeal of it, and that's not allowed. But can I look at one account or two accounts if they have a specific purpose, a good business purpose? Absolutely. You could audit their receivables. Are they accurate? Are they complete? That sort of thing. Are they collectible? So you could do just an audit of accounts receivable. It's all right. That would be a specified element, a counter item. Got the idea? That should be a good business purpose for it. It can't be. Never do you want it to be that they're hyperpages, right? So I want you to look at a few things and avoid other things. Used to be years and years ago, there were piecemeal audits where they'd audit part of it, not audit part of it, tell you what they did audit, what they didn't. Oh, it's not really very valuable reports.
So then we have some debt compliance letters, and this is just running through like with loan agreements with banks. Sometimes they require a lender or for the business to have a CPA report on the existence and non-existence of some condition.
Well, you got covenants in your bond agreement, right? Debt agreement in general. So that's what this compliance report says. You're either in compliance or not.
And it's in a negative assurance opinion and not positive.
Another thing, we got a couple more minutes, do we? Take a look back. On page 790, a couple of things. There's a report for the interim financial statements we were talking about earlier for a public company at the top of page 790. Notice the difference in wording is all I wanted to point out. A review on a private company versus a review where it's an integral part of the audit, right? This is where you're doing quarterly reports, right? And you're doing a review, and it's part of the year-end audit. We have reviewed the consolidated balance sheet of your company, consolidated subsidiaries as of this date, related to statements of earnings, retained earnings, and cash flow. So that all sounds the same. For the 3-month and 9-month periods, right? So it's clear it's interim. These statements are responsible to the company's management. We conducted our review in accordance with what? Public company accounting oversight, not SARS. The SARS would be the year-end review on private, right? So keep this straight. So I can envision questions they might give you on this. It's close exam now, but just imagining what you might get. Would they just change that to SARS and ask you what's wrong? And so for interim statements. Or it's for a year-end statement and they use public company accounting, right? You got the idea, oversight board, and you need to tell them, no, it's SARS, don't do that. Right? It could be that simple. So be aware, right? A review of interim financial information consists principally of what? Analytic procedures making inquiries of persons responsible for financial accounting matters. What does that sound like? Exactly the same wording you use for a review of a private company. Right? Okay? It is substantially less in scope than an audit conducted in accordance with the standards of peekaboo again. The objective wishes to express an opinion on the statements of we do not do that. That sounds real similar too, right? Except we don't say auditing standards, we say a public company, accounting oversight board standards. Based on review, we are not aware, this is the negative assurance, right, of any material modifications that should be made to the accompanying interim statements for them to be in conformity with GAAP US. Okay, so cool. All right, another thing you might want to look at is table 25.1 on page 791. There's the generally accepted attestation standards. Do these look an awful lot like the auditing standards? The answer is yes. Okay, and when we get back to the auditing standards, it'd be really useful to compare this sheet, right, to the auditing ones. So you go look up the auditing ones and compare them to this. These are a lot more general, because they're not, the auditing standards are for financial statements. These are for any attestation engagement, okay? But you got the same kind of stuff: adequate technical training proficiency, knowledge of the subject matter, right? Capable of evaluation criteria. In financial statements, the criteria is GAAP, right? Maintain independence is the same. Do professional care is the same. Adequately plan and supervise assistance is the same. Sufficient evidence is the same, right? Standards of reporting, you're not talking about fair presentation of financial statements, right? And making an opinion on them. Instead, you talk about the subject matter that you're working on and the criteria that you're using, okay? And lastly, the examination report over on 792. All I want to say about that is it looks an awful lot like an audit report with a whole bunch of stuff added, right? They are giving an opinion. See in the opinion paragraph? In the first paragraph, the introductory paragraph, they say we have examined, but now you're not examining financial statements, you're examining something, whatever it is, right? This is a statement of greenhouse gas emissions in this one. Management still responsible. Our responsibility is to do an opinion based on our examination. We conduct our examination in accordance with what, you guys? Attestation standards, right? Instead of auditing standards. So it's easy to switch these. And then they give a qualifier for inherent limitations, which is typical in a case like this because the criteria are not extremely well defined. And then they had categories that they were looking at, so they talked about it in notes to this report, or notes to the statement of greenhouse gas emissions, notes 1 through 7 there, notes 1 and 7. Okay, so they talked about that, and then they gave an opinion, right? So you can do this kind of work. Writing these reports is pain because every single one of them is different from every other one. Okay? Enjoy the sunshine. We're leaving 2 minutes early. Don't tell David Collins, he'll dock my pay problem. See you later.
Thank you. Can send me an email. I don't know my question.